What we've always tried to do is evolve our own real estate strategy along with where we see guest preferences evolving.
I'm here today with John Stanner, President and CEO of Summit Hotel Properties. So, John, what differences is Summit seeing between weekday and weekend RevPar across its markets, and where do you see those trends heading?
We're clearly having much better performance on the weekends than we are on the weekdays. If you look kind of at our day of the week mix, our Friday and Saturday nights are running well above 2019 levels, and that's really driven by what we've seen has been a really robust recovery in leisure travel demand since the onset of the pandemic. Even if you look at where we are on Thursday and Sunday nights, we're kind of on top of where we were in 2019, and again, a reflection of a couple things. One, very robust leisure demand, but also this newer remote hybrid work environment where people are extending leisure trips and using kind of the shoulder Thursday and Sunday nights in a way that they didn't prior to the pandemic. We've clearly lagged Monday through Wednesday. We are seeing some of that business come back, and if you look at our results in the third quarter and probably our expectations as we go into next year, I think more of our growth is going to come midweek. More of it is going to come in urban markets, and more of it's going to be driven by kind of what this nascent recovery in business transient travel and group travel generally. So we do think the outlook midweek from a growth perspective, partially because the comparisons to previous years is easier, that's where we think more of our incremental growth will come from as we go into next year.
And can you talk about Summit's focus on emerging guest preferences, including the company's recent glamping acquisition?
Sure. Well, we really like the business. I think if you look back at how we've thought about allocating capital across the space historically, we've really thought about it as owning high-quality real estate with efficient operating models. And when you look at the glamping space and you look specifically at the property that we bought in Fredericksburg, it's a really high-quality piece of real estate. They're high-quality units. We're able to charge very high rates, and we do it with one full-time employee on site there. So it's kind of the epitome of an efficient operating model. So we like the core business. Again, we tend to be able to charge luxury type hotel rates. We run very high margins. The yields on the business are very attractive, particularly relative to the traditional hotel business. So we like the core unit level economics of the business. As you alluded to, we do think that it sits very well with how we see guest preferences emerging. And what we've always tried to do is evolve our own real estate strategy along with where we see guest preferences evolving. And so when you look at particularly younger travelers, Gen Z and millennial travelers, which will make up about 75% of the travel population by the year 2030, this is the type of experience that they want, something that's unique, something that's experiential, a more residential type of accommodation, things that are outdoors, that are in nature. In many ways, we think we're creating kind of a different type segment of luxury, something that's Instagrammable and braggable and conducive to posting on social media. So if you look at the demand CAGR of the glamping business over the last 5 or 6 years, it's nearly double digits. It's probably 2 or 3 times what we've seen in the traditional hotel space.
And given the economic challenges ahead, how confident are you that the lodging sector will remain on the path to recovery?
Yeah, well, look, I think, the first thing I'd say is long-term we're really bullish about the industry. COVID was obviously very, very difficult and challenging for our industry to manage through. I do think a couple of the silver linings that came out of COVID for our industry was, I think we've demonstrated the resiliency of travel, and particularly leisure travel. We're significantly above any type of normal leisure travel demand pattern on a pre-COVID basis. So I do think we've proven, one, the resiliency of travel generally. The second is, I think this has served to really mute supply growth for a number of years. So I think we're looking at a 3, 4, 5 year window where the supply growth rate in our industry is probably half of what it was on a historical basis. I don't want to be naive or Pollyannish about the macroeconomic headwinds that kind of hang over the space. I think there's, clearly an environment where, given what's happened with inflation and where the Fed has taken rates and is signaling they're going to take rates, that's going to have some level of negative effect on macroeconomic growth. I would point out that our business, while it's historically very highly correlated with macroeconomic growth, we have dislocated to some extent given how different the recovery cycle has been in lodging and the broader economy. If you look at macroeconomic growth in the first half of this year in this country was negative. We actually had economic contraction. We had massive lodging demand growth in the business, and again, it's a reflection of just how disjointed the two recoveries have been and the cadence of different recovery patterns in the two different businesses.